What do the BRICS nations, and you, the American citizen, have in common? Once you strip out all the government data and rhetoric, the actual lived experience of everyday Americans dealing with true inflation is troubling. Since 1971, when the U.S. leadership decoupled the dollar from its golden chaperone, the intent to exit the highly inflated, faith-based fiat dollar is clear. Since that time, the U.S. national policy has weaponized the dollar as leverage in international trade. The unfair use of this leverage against trading partners, exporting U.S. inflation by forcing countries to hold depreciating dollars in reserve, the ever-growing national debt, and excessive money printing is just scratching the surface. All the while, central banks around the world are buying gold in record amounts not seen in history. To make sense of this present economic environment, we will hear from economist, White House advisor, and author Jim Rickards, economist and investor Keith Wiener, and macro analyst and investor Lyn Alden.
The system has become so imbalanced that whenever we have a recession, if the dollar gets stronger, all of these dollar-denominated debts around the world harden. And what some of these countries do is they start selling some of the assets they've accumulated, and that can do things like freeze up our treasury market, break our treasury market, and cause all these issues. So basically the hollowing out effect and the ability to kind of sustain that hollowing out for more decades than most other countries can make it so that whenever we do feel this, like whenever the world does change enough that the US dollar monetary premium goes away, maybe we enter a more multipolar world or something like that, we're kind of left holding a bag of having exported a large portion of our industrial base and then kind of getting hit with that sort of all at once. But I think going forward, we're entering a more multipolar world, either where you have separate currency blocks. So, for example, the yuan becomes the currency of choice in Asia, for example, while the dollar holds, much of the rest of the region, the world, basically split into 2 or 3 different major currency blocks. We're also seeing gold a little bit more emphasized in the core of the system. If you look at BRICS nations and BRICS and allies, they've been not really accumulating treasuries of the past decade, but they have been accumulating gold, and so that's been kind of a preference among a lot of them.
Gold is the one financial asset that has no counterparty risk. You can own Ferraris, you can own cases of old wine. They have no counterparty risk, but they're not financial assets. And the bid-ask spread can be a mile wide in good markets. Gold is the one financial asset that has no counterparty risk. So if you think there's going to be some sort of crisis or problem, central banks might do some new crazy thing that they haven't done before. And you think, okay, I want to decrease my exposure to that. Gold is the asset, that you turn to. So institutions are looking at things probably arguably in a more sophisticated way. It could be that the central banks are aware of rising stresses in the system and seek to hedge against whatever risks they perceive.
I'm not talking about e-gold. I'm not talking about COMEX futures. I'm not talking about GLD. I'm not talking about ETFs. I'm talking about gold. So gold is no one's liability. I think no one's done a better job than the Austrians of pointing that out. It's the only form of money that's not a liability. You say, what's a dollar or a pound sterling? I learned in the first week of law school, if you have a contract, you're supposed to read the contract. Take a dollar bill out of your wallet, or take a pound sterling, and look at what it says. Look at the writing. That's the contract. It says it's a note. It's a Bank of England note, or in the case of U.S. dollars, a Federal Reserve note. Where I went to law school, a note is a liability. Indeed, if you look at the balance sheet of a central bank, the money that they've created is listed on the liability side of the balance sheet.
In this environment where money's weak, we monetize other things. And so rather than investment being an optional thing that we engage in, it becomes a pretty necessary thing that we engage in. And so that can include obviously equities, it can include real estate, it can include just scarce things like gold or land, stuff like that. People have to hold their assets and other things, at least as long as we live in this world of constant currency debasement. You want to hold scarce things, and you want to hold things where it's your share of that thing is not getting diluted very rapidly.
Gold has been doing what it does for 5,000 years, and the proposition is that it's going to continue doing for the next 100 years what it's been doing for 5,000 years. In a certain sense, I don't need to prove that the dollar is failing, that the debt is skyrocketing exponentially. So savers, when they face this uncertainty, turn to the thing that they've turned to for 5,000 years, which is gold. It doesn't have a risk. It's the thing you have when you don't want to invest or speculate and take a risk. Winston Churchill is reported to have said this. God bless the Americans. After they've tried everything else, they'll do the right thing. I don't think there's any real debate as to whether gold continues to be for the next 100 years what it's been for the last 5,000 years. And in order for this proposition to fail, I'm going to make the argument that gold would have to cease to be what it's been. I would just conclude by saying the tiger does not change his stripes.
Currency debasement is an odorless gas. It fills the room slowly, and by the time you notice, the damage is done. With a volatile stock market and massive deficit spending and government debt that will shackle present and future generations with inflation, it's never been a more important time to protect your retirement savings and purchasing power. For additional resources and how to protect your wealth, see the links in the video description from some of the best gold IRA and precious metals investment companies that we have personally researched and vetted. Thank you for watching.